The broadcast is now starting. All attendees are in listen-only
Good morning,
mode.
everybody. Good day. This is the OctaFX Forex Fundamental Analysis for June 29th. The Forex webinar is brought to you by OctaFX, an award-winning broker that has one of the lowest spreads in the industry. And before we begin, a bit of some housekeeping, a few disclaimers. Risk disclaimer. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. And a hypothetical trading disclaimer. The information in this webinar is provided as general market commentary and does not constitute investment advice. Some quick words about myself. My name is Yochai Lam. I'm a Forex analyst. I used to be a retail trader, also a computer programmer. I founded Forex Crunch in 2008. The site and this webinar focus on fundamental analysis, but of course we'll touch technicals as well. On the agenda, the story is moving markets. Lots of central bank action that is moving markets quite a bit. Volatility is on the rise. Next events to look out for. We still have quite a few details coming out through the end of the week. Key levels of support and resistance. Of course, we had to update many of them because markets are on the move. And we'll do that for all major currencies. So when we're talking about the dollar, we're focusing on dollar yen. Best currency to trade the dollar on its own. Euro, which is on the move with euro dollar, of course. The pound back up there with pound dollar. Then we'll talk about two commodity currencies, the Australian dollar and the Canadian dollar. Okay, top stories. Well, Yellen does not say anything, but it does not stop the US dollar from sliding against major currencies. It's good enough against the dollar. Why is the dollar sliding? Because our colleagues are casting a bit more doubt about inflation, okay? And we had some political news early in the week. Trump care, at least for now, fails in the Senate. The vote has been postponed. Again, markets see healthcare, which is not of interest too much to markets, as a precursor to tax reform. If we get the healthcare bill, then we get tax reform, and then we get a stronger dollar. That's the perception so far. Some geopolitical developments that have an impact, perhaps minor at the moment. China cuts oil shipments to North Korea. And at the oil front, oil prices stabilize, but I still see them as quite vulnerable. Okay, and the question is, has dollar yen topped? Because we've seen it on the move, thanks to better mood in markets. Stock markets are going up, and many central bankers are optimistic. No need for the safe haven currency, despite this news about China and North Korea. But it hasn't gone too far, got a bit stuck. Okay, let's dive a bit more into what we talked about the Fed. Yellen mentioned high stock markets that didn't have too much of an impact. Williams of the San Francisco Fed, which was usually an optimistic member, he's a bit worried about inflation. So the same goes for Harker, and in the third or fourth speech the past 2 weeks he's been talking quite a bit. Fisher, number 2 at the Fed, he also expressed worries about the stock markets, but stock markets don't seem to care. And the next hike is still maybe in December. Okay, that hasn't changed. Some data figures from the United States. We had some good news from consumer confidence from the conference board. It beat expectations with 118.9, and house prices a bit slower than the previous rise, but still a healthy rise of 5.7 year over year. Not too hot, not too cold. Okay, and we had pending home sales dropping yesterday, but basically as expected. Next big event, we have important US events coming up. So first and foremost, US final GDP, the third read. It's expected to confirm the slow growth in Q1 of 1.2%, which isn't so good, but if we get something around those figures, then it'll be more or less as expected. And we're talking about Q1, we're already at the end of Q2, so it's a bit stale. If we get a big surprise, 2% for example, it'll be great news for the US dollar, especially against the yen. If we get any number under 1%, it'll be quite depressing for the US economy, bad for the US dollar. At the same time, we also have the weekly jobless claims. No big changes are expected there. For those, if you're looking a bit into Japanese figures, usually they don't move markets too much, but this is a bit more important. This is the core CPI, the inflation figures. The Bank of Japan targets inflation like other central banks. So we have that at 11:30. Just something to watch out for. Usually doesn't move markets. A much bigger event comes tomorrow, Friday at 12:30 GMT. The Fed's favorite inflation measure called Core PCE Price Index. Quite a long name. It's expected to fall from 1.5 to 1.3 every year, and that could hurt the US dollar. Okay, and we have the last but not least, the final word is for the consumer confidence measure from the University of Michigan Reuters, which comes out at 2 GMT. It's a revised figure, not as important as the initial one, but it is the last economic release for the week. Therefore, it could have a bigger impact than usual. Okay, and looking already into next week, which is the first week of the second half of the year, of a new quarter, of a new month, we have the first hint for the non-farm payrolls, the king of Forex indicators, coming out on Monday. That's the ISM manufacturing PMI. Okay, dollar yen in general, as we know, most sensitive to US indicators, moves with the chances of a rate hike, which have been relatively stable now, falls and rises with Trump. This news about the healthcare bill had a bit of a negative impact, and an inverse correlation with oil. Now let's look at the chart. All in all, I think dollar yen doesn't see the same excitement as other currencies. We're seeing here, the bigger trend has been to the downside, but in recent weeks we can see some kind of a trend to the upside, but we're a bit stuck there at the higher levels. So when we're talking about dollar yen, if we talk about levels from the top to the bottom, the cycle high has been 114.30, or a bit far from that. Then it's followed by 113.15. All right, the most recent high there, you can see this as a double top or even a triple top. Anyway, it's a stubborn cap for the pair at the moment. That is at 112.45. Okay, we're quite close to that, but unable to break above this level. That's why the question is, has it topped out? Looking a bit lower, we're looking at 111.80. Okay, so that's the narrow range. That was a high a few weeks ago. It's followed by 110.70, and then we have a lot of space here until the next line of support. That's only 108.80 before the cycle low of 108.10. So we're currently moving up within the wider range, but we're not. I think the pair has some limitations on its way up. So in Japan, the Bank of Japan continues printing money, and in the US, they're expected to raise rates once again, but there are many doubts about that because of lower inflation. Okay, let's continue to the world's most popular currency pair. That is, of course, euro-dollar, finally on the move. So the big movement came from Draghi's speech. The president of the ECB held a conference. Well, ECB, the European Central Bank, held a conference in Portugal, in Sintra, and got many central bankers to come. But first and foremost, the ECB, Mario Draghi, finally a bit more optimistic, talking about reflation, not deflation, okay? That prices are beginning to go up, and that the ECB is getting ready to remove some stimulus, okay? So that means tapering, that means printing less money, and that's good for the euro. So we had a rally beginning in euro-dollar, okay? Finally breaking out of that range of 111 to 113, and it's currently at the highest levels in 1 year, okay, since more or less Brexit. And then we had sources coming out from the ECB speaking to Reuters, saying that what markets understood is not what Draghi meant. He didn't mean to be too optimistic, he just wanted to strike a balance. So we had a very quick dip yesterday. We had a sort of a flash crash, a drop of 90 pips within seconds, but then the pair recovered quite quickly and even reached higher levels above 114. Okay. Elsewhere, other good news that supports the euro. French President Emmanuel Macron is not wasting too much time. He's beginning to work on labor market reforms that markets want to see. It's considered positive for the euro, not so good for maybe some French workers, but when we're talking about markets, it's positive news for the euro, and markets want to see Angela Merkel in Germany continue her reign after the elections in September. Most recent poll shows a wider gap, 17% lead, so that's also euro positive. And yesterday we had some data from the ECB, money supply, private loans, they were more or less as expected, showing healthy growth in these fields. The next big euro moves. Okay, so we have Spanish CPI coming up, but more importantly, much more importantly, German CPI 12 GMT. Okay, inflation figures will lead the next moves of the ECB. All this feeds into the all European figures, and then we'll get also core inflation tomorrow at Friday at 9 GMT. Okay, all in all, euro dollar, there has been another shift in the contest between the central banks. So the Fed is relatively hawkish given its stance in June, the hawkish hike dismissing inflation. However, there are some doubts about inflation. The ECB, which went a bit dovish last time, now it's a bit more hawkish with the recent statement from Draghi. So I would say the monetary front is balanced. The uptrend that turned into a sideways trading, now after a period of consolidation, we'll see that soon. We're seeing more uptrend. Growth is stronger in the Eurozone. We'll get confirmation of US growth later today. And politics look more stable. At least they look stable in the Eurozone. Okay, so let's look at the charts. We'll see this big breakout in euro dollar. Must say, quite excited to see that after this long period of consolidation, and in general, where euro dollar has traded in range for long periods of time. So finally, we're seeing a breakout. So if we're talking, currently we're at 114.24, 25. These are levels last seen about a year ago. Okay, and the pair is looking to reach even higher ground. So we'll talk about levels that are much, much higher. Let's zoom out just to get some proportion. Okay, so we're looking at levels, if we look from the very, very, very top, we're looking at 116.20. That was the high in 2016. Okay, below that we have 115, a round number, has high psychological importance. Okay, then we're already seeing the current levels about to break there. Let's see, it's not confirmed yet, this break, but we're talking about 114.25, which was the high a year ago. Okay, under that we have 113. 113 was a very, very stubborn line here. The pair made a few attempts and failed to break them. Let's zoom in once more, and then we can look at levels that we've seen most recently. That is 112.30, a recent high. Then we were talking about 11.20, 110.25 on the way down, which was a swing high, and then 108.40, the post-French elections low. So all in all, we had a long period of consolidation, a move to the upside. Will we see another period of consolidation here before further moves to the upside? Will we see a turnaround? At the moment, euro dollar has momentum. Many analysts are talking about 115 as a limit for the pair, at least in the short term. So watch out for that. Maybe the move is a bit overstretched. Okay. Right, euro dollar. Let's continue to the pound in the UK. So also here we had news. Carney changes his mind quite quickly, the governor of the Bank of England. He now talks about a need to remove stimulus. That means to raise rates. So we know that within the Monetary Policy Committee in the UK, he was in a majority that was against raising rates, and just a week ago he talked about that it's not the time to raise rates because of Brexit uncertainty, because of uncertainty about the economy. Suddenly, in this conference in Portugal, he became a bit more optimistic. He sent the pound shooting higher. So pound dollar rallies basically to pre-election levels, as if there is no hunk parliament in the UK. But at least in the UK we do have a deal happened early in the week between the Conservatives and the DUP, and today there is going to be a vote of confidence. Many analysts, again, political experts in the UK, talk about government not holding out until the end of the year, and the current government is already split about Brexit. If there will be a transition deal, which markets want, because that will mean less uncertainty, it means a long period of transition between the current UK membership of the EU and leaving the EU, or not. Okay, so again, there are questions about the soft or hard Brexit. Basically, more trade, which markets want, and less trade, which markets don't want. The Bank of England expressed earlier this week some worries about rising debt. That is now a bit in the background. All in all, pound dollar is also enjoying the weakness of the US dollar. Again, not against the yen, but against the euro, against other currencies. Next big events. Okay, so we have net lending to individuals, a measure of activity in the economy. More importantly, we have the final GDP read for Q1, a reminder that the UK economy began slowing down in 2017. It'll probably be confirmed at 0.2. Monday, we're looking already towards next week. We have all the purchasing managers indexes, so it's manufacturing on Monday, construction on Tuesday, and services on Wednesday. Okay, pound dollar, all in all, we'll do a quick good, bad, and the ugly. Hopes for a soft Brexit. Bad is economic weakness, we'll get a reminder of that. And the ugly is a divided Bank of England. Well, maybe Mark Carney now is moving to the hawkish side. He tends to change his opinion very, very quickly. But again, the last vote was 5-3, so it's a bit messy over there. Let's look at the chart. Let's see that we're getting close to 130 once again. Yes, 129.86. Look at this nice move to the upside. We're breaking above this pre-election high there of 129.80. Again, the break is not yet confirmed. Okay, if you look much higher, well, not much, but above the cycle high, we're talking about 131.30, which was a peak. If we'll zoom out, we'll see that. Just a second. Here we are. Okay, we can see this 131.30, a peak right here before the big collapse of the pound. The cycle high 130.50. Then we're talking about 129.80, which might be broken right now. Okay, waiting confirmation. Below we have 128.20, which is broken with Carney's optimism. Then 127, a round number. 126.30, 125.90, very busy there, and then 125 around psychological level. Okay. Let's continue to commodity currencies, to the Australian dollar. Not too much going on over there. The new home sales in Australia came out as expected. We have Chinese figures. Again, China is Australia's #1 trading partner. We have the official measures, the forward-looking purchasing managers indexes. They're not as important as the unofficial ones, the independent ones, but this could be a market mover. Looking into next week, we have building approvals in Australia, and more importantly, the Chinese unofficial, the independent Caixin PMI on Monday. On Tuesday, we have retail sales in Australia, but again, the second event is more important, the rate decision by the Reserve Bank of Australia. No changes expected there. They might try to talk down the currency, something they always attempt, or almost always. All in all, the Australian dollar is moving in a choppy manner. Gradual rise may have reached its limit, but everything is there, 2 steps forward, 1 step backward. Positive data from Australia, from China helps, and so far it isn't taking advantage of the weakness of the US dollar, like for instance the Canadian dollar. Okay, moves again are more choppy, more subdued. Let's look at the Aussie dollar chart. So yeah, we're seeing a resumption of the move, but we're stuck here at resistance. So again, every move is followed by a small retreat. If we're looking from the top, we're looking at 77.50 as a top line, a very strong line of resistance. Under that, we're talking about 76.80, okay, a recent high. Then we're talking about 76.35 75.60 and 75.40, very, very busy area over there. Again, having support and resistance levels so close to each other reflects the choppy nature of trading. Below that we have 75.15, again another close level, and 74.10 in the background. So all in all, we are seeing an uptrend, but again, it's a bit stuck. Okay, and our last currency for now is the Canadian dollar. And here we are seeing lots of action because we had Pelosi, the governor, talking in Portugal, repeating his optimism. Again, this central bank fest in Sintra, Portugal. The governor of the Bank of Canada Carney joined Draghi with optimism. Markets are speculating about a rate hike in October. July is a bit too soon. Oil prices stabilized. WTI is around $44, off the lows of 42. Not going anywhere fast, but not falling. It's good for Canada's, and the Canadian dollar is taking advantage of the weakness of the US dollar. Okay, next big Canadian events before we move to the charts. Tomorrow, very important, Canadian GDP. Canada is unique in publishing GDP figures once per month. We now get the numbers for April. Okay, so the first look into Q2. And we also have a survey by the Bank of Canada at 2:30 GMT. Next Friday, I'll already look into the future. We have the Canadian Jobs Report, of course, the most important release and the big driver, positive driver of the Canadian dollar. Dollar CAD, all in all, if we're looking at dollar CAD, we're seeing it in a downtrend. That means a stronger Canadian dollar. Domestic strength, the figures coming out of Canada, also the hawkishness of the Bank of Canada is beating oil. 130 is a big barrier, but we're getting very close to that. Let's look at the charts and show you what's going on. We are here in a clear downtrend, okay? Even yesterday's move was quite large, and we might see an extension of that. So if we again talk about lines from top to bottom, 136.40 is worth mentioning, very high from current levels. 135.40, 133.80 was a significant line of support, and once it was broken, the pair never looked back. And then we had 133 as temporary support, 131.60, which was a place where the pair bounced back, but now we fell under that. 130, of course. Just under 130, we have 129.70, very close over there, and then 128.30. Okay, all in all, you can see here a clear downtrend. We're back to levels last seen, well, very early in the year. So this is one of, I know many traders don't trade this pair, but it provides us with quite a few opportunities. Okay, so that's it for today. Comments and feedback are always welcome. You can watch everything in a rerun as well. More educational webinars, we began doing them this week, more coming up next week, stay tuned. And that's it, so I wish everybody success in markets, trade safely, and see you next time.